Good day, and thank you for joining us today for this Anti-Money Laundering and Terrorist Financing Update webinar. I'm pleased to be joined by my colleague, Stefan Mihailovic, as we bring you this presentation. We've prepared this presentation keeping in mind that some of you may be very familiar with this information, while for others, these topics may be new and you may be learning some of this information for the first time. Hope you enjoy the presentation. Today's topics will cover the following. We're going to take a look at how Canada has strengthened its anti-money laundering and terrorist financing regime, and we'll give you some background and some context as to how those efforts have been deployed over recent years. We'll also talk about the activity and the developments of interest that have occurred within the period of 2016 to 2022. Stefan will overview Know Your Client, as well as provide you with some information on beneficial ownership. We'll also talk about the amendments to the PCML TFA regulations. That's the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. And we'll give you some resources, being the legislation, the regulations, and some resources at FINTRAC. We'll also talk about COVID-19, money laundering, and terrorist financing risks that have increased during the pandemic times. And we'll close with some relevant thoughts. First, we'll look at strengthening Canada's anti-money laundering and terrorist financing regime and provide you with background information and context as to Canada's efforts in this regard. In 2016, the Financial Action Task Force, essentially an international standard setter, did a review of the Canadian regime and compared it to international standards. It was a mutual evaluation report that was issued, and it noted a variety of deficiencies in Canada's regime. FATF is the global money laundering and terrorist financing watchdog and is the intergovernmental body setting international standards. Canada was a founding country of FATF. Canada's reputation has been noted at risk. And an example of that is in 2021, in the March report of the US State Department, they identified money laundering as a risk for Canada as a major money laundering jurisdiction, surprising as it may be. Also, when you look at the 2021 Basel AML Index, which is an independent ranking assessing the risk of money laundering and terrorist financing around the world, you find that Canada ranked 77th out of 110 countries on a highest to lowest risk rating scale. While we're in the right half of that pack of countries, there's certainly room for us to do much better, and preferably so. Money laundering is a global professional system. There are money launderers around the world that spend their time looking for the gaps and the stable economies and financial systems that they can put dirty money into. This is a bit of an oxymoron, I find. Why would people that are looking to launder money look for economies that are stable and financial systems that are secure? And the answer, of course, is that those that have worked very hard to achieve those ill-begotten gains don't want to lose them by putting them into a risky financial system. So they look for security and safety in both the economy and the financial system, making Canada a target. Money launderers may involve unwitting individuals, including professionals, those that do not know that they are being utilized for their skills or for their connections. And organizations are often used, and a series of events or transactions are used to design to conceal the illicit intent of those transactions. Internationally, it's stated that 70% of money laundering utilizes corporations. And that's a relevant fact, especially for us in the professions who tend to work with companies. We need to be aware that corporations could be used for illicit purposes. FINTRAC, which is the country's supervisor and regulator of the anti-money laundering and terrorist financing regime in Canada, reports that the majority of disclosure packages issued in the 2020 to 2021 period were issued to Ontario, British Columbia, Quebec, and Alberta. When these packages reach a certain threshold, they are disclosed to law enforcement and national security agencies. But don't be surprised to realize that these types of issues are occurring coast to coast in every province in Canada. As well, in that same annual report, FINTRAC indicated that the top 3 offense disclosures in 2020 and 21 were 35% to fraud, 34% to drugs, and 9% to tax evasion. Because money laundering always has an underlying crime. It's called the predicate crime. Let's now look at recent activity and developments of interest that have occurred during the period 2016 to 2022. There's been a lot of change and a lot of advancement. During the period of 2016 to 2018, it really began, as I mentioned earlier, with the 2016 FATF report that reviewed Canada's regime against international standards. One of the things that it identified is that Canada has a lack of beneficial ownership transparency. In other words, entities such as corporations can be used to hide the purpose or the individuals behind transactions. It also identified that there were additional requirements that should apply to sectors, including accountants, as they are provided for in the international standards and as are currently done in other countries. In 2016 to 2017, the federal government established several public-private sector committees formed by the Department of Finance Canada, and CPA Canada has been part of those committees ever since. And these committees have the purpose of strengthening the AMLTF regime in Canada. In 2017 to 2018, the federal and provincial finance ministers publicly addressed beneficial ownership and the need and the desire for change in Canada. In 2018, the Department of Finance Canada consultation paper was issued. And this was a far-reaching paper to look at Canada's regime and how it might change into the future. One of the things it did was signal the potential change for beneficial ownership. Also in 2018, Parliament's Standing Committee on Finance had a mandatory review of the AMLTF legislation in Canada, and as part of that review, it made 32 recommendations, some of which would be applicable to the accounting profession. So much change happened in this period. In terms of 2019, we'll look at the recent activity and developments of interest for that year. First off, there were significant changes that were made to the Proceeds of Crime, Money Laundering, and Terrorist Financing Act regulations that were overhauled, with most of those changes becoming effective on June 1st, 2021. Also in 2019, a change was made to the Canada Business Corporations Act, requiring companies that are private to keep beneficial ownership registers with a direct potential impact to CPAs working with private companies in a variety of different roles. FATF updated the risk-based approach guidance for accountants internationally. That's a new publication that was updated. And as well, in that same year, British Columbia commissioned 4 reports on money laundering and launched the Cullen Commission to review money laundering, to make findings of fact and recommendations for sectors that included the accounting profession. In terms of 2020 to 2022 and recent activity and developments of interest there, momentum was building for beneficial ownership register requirements for all private companies, with analysis taking place federally and provincially regarding publicly accessible registries. The Cullen Commission began its formal hearings in February 2020, ending with closing submissions in October 2021, and both CPA BC and CPA Canada participated in those hearings. The final report for the Commission has been extended from December 15th to May 20th, 2022, when it will be provided to the BC government. Also during this period, PCML TFA regulations were further revised with specific changes, and those additional changes mostly became effective on June 1st, 2021. Last but not least, FATF reported on Canada's progress in strengthening measures to tackle money laundering and terrorist financing, and was complementary to the country's efforts. Many of the changes that apply to accountants and accounting firms were commented on in that report as Canada strengthened its regime. And now I'd like to hand it over to my colleague, Stefan, to cover off the overview of Know Your Client.
Thank you very much, Michelle. Moving on now to the overview of Know Your Client. Knowing your client is a concept that should already be familiar to all of us. As professional accountants, it's baked into our code of ethics. But not only that, it is fundamental to good business practice to know who you are dealing with. And on a positive note, it can even help you better tailor products and services to them. However, the underlying seriousness of Know Your Client cannot be lost on us at all. It's very important from both a professional and legal perspective to ensure we have a clear line of sight and documentation on who we are working with. In fact, Know Your Client is one of the 5 requirements that are fundamental for accountants and accounting firms to perform when engaged in activities covered by the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. These requirements help contribute to the prevention and detection of money laundering and terrorist financing, And the legislative requirements are very specific and can go beyond what may be required from a professional ethics standpoint. They include several items such as the implementation and maintenance of a compliance program, knowing your client, which is what we're going to be dealing with here, and beneficial ownership information, which will follow this. It also captures things such as reporting. These are things like filing suspicious transaction reports or terrorist property reports to FINTRAC. There are also various record-keeping requirements and even ministerial directives that we need to be aware of. Throughout this slide, you can find links to additional resources. We've got an article from CPA Canada listed at the bottom, but throughout even the middle of it, we've got links taking you to FINTRAC and other websites for source documentation. So please remember at the end of this slide deck, or at the end of the presentation, to download the resources because these links will be live in your PDF version. So what is Know Your Client? So to help identify some of the specific Know Your Client requirements of the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, we provided the below list of 5 key obligations. The first, verifying your client's identity, whether it be a person or an entity, trust, corporation, what have you. Verify who they are. Determining if a third party is giving them instructions. For example, you might be dealing with someone you know of, but are they being influenced by a third party that you're unaware of, or you've gotten a sense that they are being influenced by such a person and that's giving them instructions. Determining business relationships, and then of course, conducting ongoing monitoring. Now, these next 2 I want to highlight because they're new requirements that accountants and accounting firms must follow. So please pay special attention to those, but obviously all 5 of these are of utmost importance. So the next one is obtaining beneficial ownership information, which, as I mentioned, we'll explore a little bit further on in the slide deck. And then finally, determining if you are dealing with politically exposed persons or heads of international organizations, their family members, or close associates. So in addition to looking at the Act and regulations, CPA Canada has also prepared an article providing a high-level summary of Know Your Client rules. So that might be a helpful resource for you as well. And again, there's a link for that at the bottom of this page. Now we're going to look at an overview of beneficial ownership. So from our Know Your Client perspective, then from that we fall out into the beneficial ownership category. So that's what we're going to touch on here. So what is beneficial ownership? In some ways, it's a very simple concept, but often actually difficult to determine in practice. It's looking to find who really owns and or controls an asset or entity. And to find this, it means you'll have to do things like look through share structures, look at corporate structures. If there's any trusts involved, who's controlling them, who's the settlers, who are the beneficiaries. It's also looking at ultimate control that may not be through a way of ownership. That's where I would touch on influence. So it's not always just the share structure or the corporate structure. Sometimes you have to look at ultimate control outside of the ownership perspective. And then, of course, there's looking behind nominees. It becomes readily apparent that not knowing who really owns and or controls an asset or entity that you're working with could allow for illegitimate transactions to take place. As the next slide will show you, and it might surprise you, although Michelle kind of hinted, this Canadian secrecy, as you may have it, has actually been identified by international players as being used by criminals to help launder money. With that in mind, beneficial ownership is now becoming a priority in terms of creating better corporate transparency in Canada for private companies. Beneficial ownership and why it matters. As mentioned earlier, it was the 2016 Financial Action Task Force report that indicated concerns with Canada's beneficial ownership regime, or lack thereof. It was a specific and serious concern for Canada's anti-money laundering regime that we lacked beneficial ownership information that was readily available. Our lack of transparency was used by criminals to evade tax, launder dirty money from crimes such as human trafficking, illicit drugs, and firearms trade. Michelle also mentioned earlier in this presentation that internationally, some 70% of money that is laundered goes through corporations. So it shows you that if you don't have an open and transparent corporate system of beneficial ownership for companies, you're going to be a destination hotspot for money launderers around the world. Professional money launderers look for gaps in the system. So if they can hide money in Canada easier than somewhere else, guess what? They're coming here. And this is one of the reasons Canada is making the changes they are. So the lack of transparency has created a risk to our society, our businesses, our global reputation, and our international partners. And that's another important part of the story. With money laundering and businesses being global, it means the problems are global. So we have to be able to share information with our international partners. And in fact, we do have agreements that do just that. So what does increased beneficial ownership transparency do? Well, it allows for authorities to identify and charge for crimes committed. It allows for authorities and others, such as those participating in the AML-TF regime, to prevent crime. It allows for authorities and others participating in the regime to prevent the proliferation of dirty money in our financial system and the economy. Finally, it also allows Canada to join our international players, preventing the proliferation of dirty money. By gathering more information here in Canada, we are able to help our international partners just like they help us. And then we've smoothed out the playing field and we won't be targeted as much by money launderers. So it's very important, and this is why the federal and provincial governments are focusing on increased transparencies for companies. The new Canadian beneficial ownership rules. So now I'd like to give you a brief example using the Canada Business Corporations Act, the type of requirements that we're seeing there. That is, the federal CBCA corporations were required back in June of 2019 to create and maintain a list of individuals with significant control. Significant control is defined as 25% of the voting or fair market value of shares held directly or indirectly by an individual. There are other components of what significant control is, and it may not always be by way of share ownership. It could be through debt covenants or by actual relationships that have control of an entity. However, even just looking at the 25% voting share part, that might be somewhat easy for you to grasp and identify. But it becomes a little bit more tricky when you're looking at the or fair market value component of that definition. This can be very hard to come by, especially when considering private companies. Typically, private companies don't have a readily available fair market value that can just be used or referenced to. So this will be something that professionals will have to be aware of and be prepared to look into in order to be onside these beneficial ownership requirements and the significant control definition. Especially because there are significant penalties, of course, for non-compliance with this rule. Starting with the 2022 tax years, for those with December 31st year ends, trusts will also have new requirements, including the need to detail the identities of beneficiaries, settlers, and trustees. So that will be further documentation requirements that will need to be done. The final point on this slide is the beneficial ownership rules are developing across Canada. So make sure that you do check for updates, not just federally, but also in the jurisdictions that you're operating in to make sure that you are on side any of the new developments. New beneficial ownership rules, the implications. These beneficial ownership rule changes are expected to improve corporate transparency and assist with international information sharing with our partners to help stop money laundering. With that said, these requirements will have significant implications for CPAs who own, govern, or operate a private company. So members in public practice and in industry, please be aware of these rules. With beneficial ownership information being collected, the information can begin to be compiled into a registry for easy sharing with law enforcement, and there is even the potential of a publicly accessible registry that might one day be developed. With so much happening around beneficial ownership, CPA Canada helped author a paper in May 2020 to help Canada and other international players understand the global framework and the views of the accounting profession on these changes. Now, Michelle will touch on some amendments to the PCML-TFA regulations over the previous years. Over to you, Michelle. Thanks.
Thank you, Stefan. And to look at the amendments to the PCML-TFA regulations, just looking back to the next slide, please. July 2019. There were wide-ranging amendments made to the PCML-TFA regulations at that time, with most of them becoming effective on June 1st, 2021. And then further, in June 2020, some additional specific amendments were made to the regulations, with most of those changes also becoming effective June 1st, 2021. The purpose of these various amendments that were made to the regulations were to strive to align Canada's AML-TF regime with international standards set by FATF, and also to level the playing field of reporting entities and to strengthen Canada's regime. So prior to these changes, some reporting entities within the regime, such as banks, might have a requirement to do something under the regime that accountants didn't. Many of those same requirements that were applicable to banks in the regime are now applicable to accountants. That's the way it actually leveled the playing field for reporting entities and strengthened the regime. The Federal Department of Finance has indicated that the AMLTF regime must be continually updated to respond to emerging risks and evolving international standards. So this is not a once and done chapter. It is going to be something that will evolve continuously in relation to the risk that Canada's financial sector faces, and the regime will be enhanced accordingly. Some of the highlights of the regulation changes that have occurred include timing for suspicious transaction reports. And the timing was changed from what had been previously within 30 days to as soon as practicable. And with that, in April 2020, FINTRAC released new STR guidance, and that is accessible at the link that's indicated on the slide. In terms of large cash transactions, transactions made over a 24-hour period now aggregate and are required to be reported when they exceed $10,000 Canadian or more. And with virtual currency, many changes occurred, including that VC dealers now must register with FINTRAC. In terms of identification, the documents used to verify ID were required originally to be original, valid, and current, and that's now been changed to authentic, valid, and current to make it more of a contemporary test. Expanded obligations for accountants and accounting firms to ascertain and take reasonable measures to confirm beneficial ownership when required to verify the identity of an entity was included, as were requirements concerning domestic or foreign politically exposed persons, head of an international organization, or a close associate or family member of a PEP now applicable to accountants and accounting firms, all part of these regulations that were just changed. Now, I'd just like to take a second to look at some resources on the legislation, the regulations, and FINTRAC resources. The Proceeds of Crime, Money Laundering, and Terrorist Financing Act and the regulations can be found at the links that you see on this slide. As well, you can obtain a generous amount of guidance from FINTRAC at the link shown. And we would also encourage you and highlight FINTRAC's mailing list, where you can sign up for email updates from the supervisor and regulator of Canada's AMLTF regime. Just a few words too about COVID-19 and money laundering and terrorist financing risks. We've all endured much change in recent years due to the pandemic, and the pandemic's disruptive force has also interrupted and changed the plans of those with money laundering and terrorist financing objectives. In fact, FATF reported increased risks and threats could be seen early on in the pandemic for money laundering and terrorist financing, and they have indicated that they expect them to continue at that higher risk throughout the pandemic period. There also have been new vulnerabilities created through the disruption, through the health and the economic challenges endured around the globe, such that those with money laundering and terrorist financing objectives are finding new opportunities. Some examples of potential MLTF risks during the COVID-19 period include laundering of ill-gotten funds from government support pandemic programs, stockpiling of cash because of border or travel restrictions that may be redeployed through otherwise legitimate businesses suffering the severe economic challenges of the pandemic and being in need of financing may now rely on illicit money. Laundering of ill-gotten funds obtained through increased cyber activities such as identity theft and business email compromise has soared, as we know, internationally. New global, jurisdictional, and sector money laundering and terrorist financing risks during the pandemic require awareness and understanding. And as the pandemic wanes, we know that the recovery will be uneven globally. So it is something that we have to pay attention to as we consider the significance of the recovery process and also what regional recovery efforts look like for our clients and for the companies that we work with. COVID-19 also saw some support for temporary support for organizations in their compliance with FINTRAC and also in relation to the changes that were made to the regulations effective June 1st, 2021. But FINTRAC has recently announced its withdrawal of the temporary COVID-related support to reporting entities, and we've highlighted there for you the announcement of this by FINTRAC. In terms of closing thoughts, thank you for your interest in participating today in this webinar and in attending. It's been our pleasure to supply you with this information and to share our thoughts. We hope that it has provided you with useful resources to consider. Indeed, one that we'd like to highlight is a recent publication by CPA Canada called Risky Business: Non-Compliance with AML Requirements. And it is indeed risky not to comply with the AMLTF requirements in Canada if you are required to do so under the legislation. This article highlights the types of issues that can occur both under the PCML-TFA as well as the Criminal Code in relation to non-compliance. We hope you'll take the time to refer to this additional publication. Thank you so much for attending, and we hope this information has been very useful to you. Bye now.